Okay, so continuing where we left off. So we had marked this place as the daily cycle low. So if you are trading on the daily cycles, you want to be buying on the daily cycle low, maybe sell on the half cycle high, then buy back on the half cycle low, then sell on the daily cycle high. So here you can see that in a bullish price trend, the daily cycle high is higher than the half cycle high in this case. So you can see that price went higher than this point. At that point, then it came down. Now once price has moved above this trend line, we now say it is resuming a new daily cycle. So we start the count from here. So here price moved up for 5 days, then it started coming down again for on the 11th day, and it reached a low. So usually this is what we call a back test. A back test is whereby price reaches a cycle low, moves up, then it comes down again within a period of less than 12 days. So maybe below average of 14 to 12 days, that's when you get a back test. After back testing, then price moves upwards. So let's say, for example, a trader buys on this point and sees that there's a reversal candle. If they do not work with cycles, they're likely going to think maybe price is reversing downwards. Then they say, okay, let me sell. Then they sell, it reaches a back test, they feel like, oh, maybe it will continue down. Then it starts moving upwards again. But if you understand cycles, you just know that this share is back testing. So it moves upwards. The first stop that it reaches and makes what we would call a peak, or what we can call the half cycle high. This is the place that it reaches, then it moves downwards. So it has corrected from half cycle high to half cycle low. Now after half cycle low, we are expecting a daily cycle high, which means price, we are expecting it, if it's bullish, it's going to go way up than this current price. But in this case, we see that after making a swing low, price tried to make another swing high, but it ended there. Then it started moving downwards. Then it moves all the way down up to this point here. So now if we draw a trend line from this point here to this point, we can see that price started moving downwards. If we had drawn another trend line, remember we draw a trend line for the uptrend from the daily cycle low. In this case, because of a back test, if we draw a line, it's just going to continue all the way to this point. So in this case, we would be drawing our trend line from the back test to the half cycle low. So we now say if price breaks below this, then we know it's moving towards a daily cycle low. So in this case, price moved down and reached the lowest point here. When it moved back above this line, then we say it has confirmed a cycle low. But now in this case, we have a problem. Price, we were expecting the daily cycle high to be higher than the half cycle high. Whenever you see a daily cycle high that is lower than the half cycle high, usually that's a strong indication that price is now trending downwards or sideways without moving above that point. And it will do that until the point it has reached what is called an ICL. So an ICL is the point that price is going to reach after reaching a peak. So usually a cycle is made up of about 4 to 5 daily cycles. Sometimes it can be 3, but those would be like long daily cycles. So when you see something like this, like price has peaked in cycle 2, then you can be sure that price is going to trend down for another 3 daily cycles. So in the next episode, we are going to look at how the daily cycles progressed after the price has reached a peak all the way to the ICA or intermediate cycle low. Thank you.